Hey everyone, and welcome back to the breakfast show. Good morning, good afternoon, good evening to everyone joining right now. So, contrary to last week, it seems like we're going to start this week with a bit more green in the market. The government shutdown is supposedly going to end. Now, there are again a couple of things that we need to discuss. One of the reasons why Oscr is down is because of maybe potential changes in the way people will purchase their healthcare plans. But we'll talk about that in this video. We're going to go over Pagaya's earnings report. They reported this morning. Great quarter. Stock is up, I think, around 20% last time I checked. Later today, we do have CoreWeave. Tomorrow, we do have a Nebius and a Rocket Lab later today as well. Nebius tomorrow morning. We'll make a stream for that as well. So, good morning to everyone joining in the chat here. Really appreciate that. So right now, what do we have? We have this. This is basically the heat map pre-market. Looks good, right? I don't think we can complain about this. But then again, it is just pre-market, right? We've seen this before. We've been bamboozled before. We see here names up 8%, 6%, 5%, 4% pre-market. And then when the market opens, poof, gone. Right? This is pre-market, lower volume. And yes, my Pagaya options are almost safe. Well, even with the stock being quite close to $30 right now, I still think I'll be deep in the red for now. But yeah, all in all, it seems like the market is in a better mood as of right now. We do have, of course, the two red names here. Oscr is down 8.2%. United Health is down 2% right now. Now, what's interesting, for example, with Oscr is that we are going to go and revisit that 200-day moving average. We've seen that 200-day moving average last Friday. Then we rebounded. We even closed out the week above the 100-day moving average. But right now, it seems like we're going to go and revisit the 200-day moving average. Now, you're going to ask me, okay, are you a buyer of Oscr right now? Good question. Good question, because there are still some unknowns, but we do have this. Oscr launches new affordable health insurance choices for Southern Florida individuals, family, and businesses. Now, the big, I would say, unknown right now with Oscr is, of course, this ACA subsidy extension. Right? I'm not 100% sure, but from what I've understood is there might be a vote. What is it in December whether or not they might extend it or not. But that's not the issue. The issue is the proposed, let's say, plan from President Trump on the way people buy their insurance. So the way that it is working, or maybe not really working right now, is that the money gets sent to the insurance companies and the prices are lowered, right? It's basically subsidized. Right now, well, not right now, the plan is to send money directly to the people and for the people to make their own decisions and buy their own plan. Now, I don't know exactly how that is going to work. Is that money going to be tied to only insurance programs, meaning you cannot use that money to buy something else? Because I can already see a scenario where people will be getting basically free money, but that money is supposed to go towards your insurance, but instead it goes towards your Netflix subscription, or I don't know, groceries, which, okay, is not a bad thing, but still, I don't know how that exactly is going to work. But for Oscar specifically, short term, I would say not great. Long term, for Oscar themselves, I mean, this is basically what they told us last quarter. If I can pull it up really quick. So this is what they told us last quarter. Oscar has explicitly addressed the anticipated expiration of enhanced premium tax credit, indicating it is a significant factor in the 2025 reset moment for the individual market. The company does project an overall market contraction of 20 to 30% due to this expiration. Alongside program integrity efforts, in response, Oscar's 2026 pricing strategy assumes the absence of these tax credits, leading to a weighted average rate increase of approximately 28%. This disciplined pricing also accounts for elevated trends and significantly higher mobility observed in 2025. While Oscar has priced for the expiration, they remain optimistic that Congress will reach a compromise to address affordability issues. Should enhanced tax credit be extended, the company does not foresee meaningful price changes, but notes the potential for members to receive rebates due to minimum medical loss ratio requirements. The anticipated expiration has influenced Oscar's mental strategy by what is it? Oscar's metal strategy for 2026, shifting focus to gold and bronze plans designed to fit specific profiles and provider networks, offering differentiated pricing compared to competitors. I'll say it again and again. Oscar being a tech, let's say, built insurance healthcare company does give them certain advantages compared to their competitors. They can move faster, they can see maybe, or they can see the data and adjust accordingly, which is exactly what we've seen. Right? We've seen that already this quarter. We're expected to see this already in 2026. So they're already anticipating, I would say, worst case scenarios for 2026. Now, with the money going directly to people and people having the options to choose whether they go with Oscar, whether would they go with someone else, the effects of that are I can't even predict. Right? I can't predict that. It's unknown. It's right now just a floating plan. And so, yeah, what we're seeing with Oscar is a reaction by the market because of uncertainties, not because the business is doing badly or because they expect to do badly in 2026. No, actually, they expect to return to profitability in 2026, despite all of these, I wouldn't say rosy day scenarios. So we'll see. We'll see what happens with Oscar. If there is maybe a bit more information we can work with, I think long term, my thesis here remains on Oscar unchanged as of now. And there might actually be a clip I would like to show you guys. 1 second. From Oscar CEO, not that long ago. And then we're going to have a look at Pagaya, because Pagaya again showed why they're not compared to an upstart. So this is Oscar's CEO. I don't remember exactly when this was, but doesn't really matter. Let me know if you hear everything correctly.
So this idea of letting people have employers give the money that they are otherwise used for health insurance, give it to the employees and let them buy it, is called defined contribution. We did it with pensions 20, 30 years ago. Now the time has come to do it with health insurance now that we have a fully developed, the largest risk pool in America, the ACA market, and now turn it into an individual market for everyone. We can do it for gig workers, where they can create hour banks and just put away so much and then go out and buy their health insurance from the individual market. So the total individual market has an opportunity to hold 125 million lives, which would make the risk pool even more stable and less costs. So the time's coming. So there is legislation introduced in the current bill on making ICHRAs move forward, helping ICHRAs move forward. And this is sort of the potential size of the market. The chart before was the relative rate of increase on trend versus employer market and CPI. So we really think we have a product here that's the future, where Americans can buy what they want, have the network they want, and keep the product they want over time, and have a much more stable experience, and not have to change your insurance every time you change your employment or you go to a different part of your life.
Now,
I think that's enough. And it explains again why I do believe that Oscr has a very bright future, because they're thinking ahead, right? Especially with ICHRA, which also is something that they're working on very, very aggressively. They think this is going to be the next big thing. And yes, answering this comment right here, wouldn't people be buying Oscr more since it has competitive prices? Trump's plan will never happen, but still, it should be bullish for Oscr. Again, you're putting a lot of trust in humans getting free money and making the right decision. We've seen what has happened when you gave people a lot of free money during the pandemic, right? I don't think all of that money went to things that they really needed, more to things that they wanted. But yes, ideally, people would go and choose the best plan for them, which, according to the CEO, should be something that Oscr offers. Ideally, of course. As you know, we're not living in an ideal world where every ideal scenario is happening, but it could happen. It could happen. Now, going back to what was said last earnings call, more specifically with regards to ICHRA, so the individual coverage health reimbursement arrangement. One heck of a name, I have to say that. One heck of a name. So Oscr Health views this as a key driver in shaping the future of employer coverage and sees significant growth potential. The company's pricing in major markets is competitive when compared to traditional group plans, and they anticipate continued conversion from small and mid-sized employers who are currently experiencing double-digit group rate increases. This, of course, the growth in ICHRA should remove, in my opinion, in the long run, the risk of being always, okay, there is issues with ACA subsidies, Oscr is going to come down, there's risk on the business. I do think that the rise of ICHRA, the success of that, is going to rebalance everything here. Rob here saying one of my bigger customers, large regional US bank, is onboarding Oscr into their system. Always good info to get here. So with Oscr, again, I'm not saying an overreaction, because it's a reaction on something that is happening and something that might happen that could impact the business in the short term. Maybe. Very strange sentence to say, but that's a lot of the time what is happening when you're seeing these types of moves in the market with Oscr. But long term, do I still believe in the business? Yes, very much, very much. Again, key support here is that 200-day moving average at around $16 for Oscr. Again, we'll see what happens when the market opens. Then, moving on to Pagaya. So Pagaya reported earlier this morning. Stock is up right now. Where is this tool? Right here. Would be great if they had shortcuts. Stock is up around 21%. So a bit like last quarter's. At last quarter, the stock also jumped, but then retraced. Hopefully it won't happen again. But these were Pagaya's numbers. Where is it now? Here it is. So they beat across the board, right? They beat across the board. They beat EPS, beat on revenue that increased 36% year over year. Exactly. I support Chelsea, as you might have seen from the community post. Adjusted EBITDA up 91% year over year, and they see Q4 2024 revenue at around $333 to $358 million. The expected number was $353.4 million. As for the full year guide, that has been raised as well, $1.3 to $1.325 billion. Midpoint. Expected number was $1.31 billion. This was another very good quarter by Pagaya, especially after everything that we've been hearing over the past couple of weeks, what we've seen with Upstart as well. Here, again, they're showing that they're not like other companies, that they're not like an Upstart, that they are, I won't say best in class, but up there with the better companies. As for platform updates, Auto and point of sale drove growth in network volume, signed inaugural auto forward flow with Castle Lake up to $500 million in auto loans, bring the total forward flow and pass-through capacity to approximately $5.5 billion since the end of 2024. I'll show you a couple of things from the presentation. The comments here from the CEO are results demonstrate another quarter of prudent underwriting and consistent execution across our network as we raise full year guidance for the third consecutive quarter. Our pipeline has never been stronger as lender across asset classes recognize the unique and powerful value proposition the Pagaya network provides. We are committed to bridging Main Street and Wall Street for the long run. This was Pagaya. Good commentary as well. Let me actually show you some things here from the chart, from their slide, sorry. Well, I sold at the price that is lower than where it is today, so it's not like I gained something. No, not print. Almost printed the whole thing, but okay. These were the results. Basically, these were the results. Again, very, very good quarter. This is a company that did not want to overpromise, especially in not this year when things are moving quite aggressively in either direction. And that's why we're having 3 consecutive quarters where they're raising guidance, because they have their, let's say, base case scenario. They're going with that. And if they over deliver, then they will raise their own guidance. This is why here we do have a margin of safety with that company. All in all, yes, my only issue is that I have call options for January that are going to expire in January. Strike price $30 and $40. They are, of course, deep in the red right now. If I had shares, I would be very happy at today's prices. But I have options. Why do I have options? Because yes, I thought that this would be a very good quarter and the stock would have gone up significantly. Stock is up significantly today, but that's after the stock has come crashing down quite a lot. Again, I'll repeat this time and time again, because people think that when you buy call options, you're always going to make a ton of money. But no, there is, of course, very big risk associated to this, is that you're completely wrong on the timing of it. You might be right on the thesis part, but you might be completely wrong on the timing, and that's where you are getting screwed over. So wanted to make that very clear. How red will my options be after today remains to be seen. Again, we are going to see how we open today. But I'm trying to find this one slide. I've been scrolling down for the last couple of minutes, but I can't find that slide anymore. I don't know. Very strange. But anyways, all in all, good quarter. Good quarter. That's actually easy to control. They could launch an app that has a digital wallet with no purchasing or withdrawal feature. What are you talking about? You're talking about... No, I'm not sure. I'm not sure what you're talking about. You're talking about the payments to buy the insurance programs? Not sure. Anyways, moving on to the other one. Instacart also reported. As you can see, for the quarter, beats across the board. As for guidance, still okay. They met your GTV estimate. Seems like a good quarter for them. I've not really followed that company that much. Instacart. I've never actually met someone that uses it, if I'm being honest. Wait, they changed their name? I thought Cart was Instacart, but apparently it's Maple Bear. Huh. Mind-blowing stuff. Let's see. Oh, no, it is Cart, so maybe what? Maybe it's the same thing. Let's see. Now I'm confused. Okay, did you know this? Did you know that Instacart's legal name is Maple Bear Inc.? Haha, I guess you didn't know this. Me neither. But now you know. The more you know, the better. The more you know, the more you can forget as well. So at the end of the day, you might know less than you knew before, but okay. Applied Digital. They say its subsidiary, Applied Digital Compute Co., plans to raise $2.35 billion in senior secured notes due 2030 in a private placement, of course, to grow much faster. Ask me about Monday, so here it is. We are Monday, so Monday reports. Yes, that is common knowledge. I did not know this. But then again, I don't really follow Instacart, nor have I ever used it, ever. So Monday, EPS $1.16. Estimated number was 88 cents. Revenue came in at $316.9 million. Estimated number was $312.3 million. That's up 26% year over year. But as you can see, the guide for Q4 is a miss. Let's see if we have here some commentary. NDR, 111% overall. Okay, still not bad, but maybe it has been coming down a little bit. We'll try and see if we already have some charts on Fiscal AI. I doubt, because it's still quite early. CEO, CFO commentary: strength of our execution, moving up market while expanding the product suite. Highest ever non-GAAP operating profit, focused on efficient, profitable growth. Okay, interesting. Interesting. Let's see what the stock is doing with Monday. So Monday, it's down. Well, it has been coming down heavily, actually. So we're back to November 2023 prices. Right now, stock is down 18%, 18.5%. Even last quarter it was also down quite a lot, tried to recover, and now we're down even more here with Monday. Monday is truly the worst day. So I guess that's what you get. But imagine they were called Friday. Oh well. It is what it is. Yeah, let's maybe talk a little bit about CoreWeave, because CoreWeave does report later today. It's up 4.7% pre-market. Same with Nebius, 4.6% or something like that. Okay, wait. Let me first maybe answer some questions. Vladimir asks here, could you please explain for the noob what are the benefits of buying calls versus regular stock? Well, the benefits are if the stock goes up, your call depends on which call option at what strike price you're buying it, but the too long didn't read explanation is, let's say your stock goes up 1%, my options might go up maybe triple that amount in one day, again depending on my strike price and depending on the expiring date. So when you're buying a call option, you're of course hoping that the stock goes up. You're buying that call option at a specific strike price for a specific date. You would like the stock to hit the strike price before that specific date. And well, hopefully the real money is being made when the stock goes above your strike price well before the specific expiring date. With the stock, it's just okay. If the stock goes up $5, you're making $5 on your shares, right? $5 extra. With options, you can be making a lot more. You can also be losing quite a lot more quite quickly. Like you see, let's say you buy a stock at $100, stock drops $5. If you held the shares, you only lost $5. If you held options, you're probably down as a percent a lot more than $5. It's very, very in short, amateur explanation. But of course, it goes both ways. Of course, it goes both ways. What did I say? Oh, yeah, CoreWeave. CoreWeave. Or maybe let me answer. Some people are asking about United Health if I will re-enter it right now. No, not yet. Actually, no. Again, the reason why I sold is not because I want to re-enter. If I sold because I thought it was too expensive, then I probably would have never bought it because I don't think it was too expensive. I sold because I like other stories more. I would like to add more to Shift 4. I would like to add more maybe to dLocal, to Nebius, to Rocket Lab, depending on the next coming days because they're all reporting their quarterly figures. I would maybe like to add more to Oscr as well, right? If we do have more of an overreaction, maybe I'll stick with just one insurance name. And so I did not sell United Health because I'm bearish, like I explained. I just sold it because I liked other stories better, and the prices of these stories have come down quite significantly. Grab and United Health, of course, two different companies, completely different stories, right? Completely different stories. Where is Grab right now? Still $5, $6 now, almost $6. I've covered Grab a year ago. I've covered Grab a year ago on the channel before people actually knew what Grab was. I think it was around, maybe around here, maybe around $4 or maybe a bit less, a bit above it, maybe. It's a very interesting company. It's a company, I said it, I think it's one of the titles of the early videos where I said Grab, is it a $100 billion company in the making? Grab was is a $20 billion company or so. Is it a $100 billion company in the making? I think yes, just takes a long time to get there. People think that just because the stock is worth $5, $6, $4, that the market cap is quite small. But no, the market cap is already quite big, all things considered. I didn't buy Grab because I own Uber. And Uber owns, I think, what was it, or still is 13% of Grab, unless they sold, I don't know. But that's it. Second of all, or third, do I need Grab in my portfolio? Is Grab's growth story better than a Mercado Libre? My answer is clearly no. I see why people like Grab. I like Grab, but I don't need to own it, especially not since I have a Mercado Libre and I have other stories as well. The local, okay, might not do the exact same thing, But in the fintech space, I have enough. I think, right? I have enough with Shift4, with PayPal, with SoFi, with the local, and then with Melly. Melly basically gives me everything I need. So I like it, but I don't like it so much that I need to own it directly. I own it indirectly thanks to Uber, and that's good enough. That's good enough. What about Oscr? No, I did not sell it. I might actually just add more, depending on if I get more answers. What are my thoughts on Lemonade? Unfortunately, I never got to make a video about Lemonade en route 2 weeks ago, but it seems like the conclusion of my video would have been correct. I mean, I've talked about Lemonade quite a lot for a long time. I've held it for a long time. I don't have it today. But Lemonade, if I had to choose Lemonade and Root, I would still have to go with Lemonade because it does give you multiple options in the insurance industry. They've been doing very well. They're growing. Their gross loss ratios are coming down. They're basically doing what they've told us that they are going to do for the last couple of years. So yeah, congrats to all the Lemonades shareholders out there. I mean, it's probably more expensive than Root because it seems like they're doing quite well. And again, Root is just focused on one thing. Lemonade is focused on multiple things in the insurance space. Is CoreWeave a profitable company or just hype? Well, if every unprofitable company is just hype, then we're going to have a problem, right? I don't think that every unprofitable company is just hype. There are multiple companies that were not profitable and became profitable. The whole thing here is to see if a company has a path to profitability. If it does, great. If it doesn't, then yeah, there is an issue. There is an issue. Of course, right now, CoreWeave is unprofitable. Is it just hype? I don't think so. I don't think so for now. For now, very important to note. But let's actually have a look if we can get some comments here on CoreWeave or estimates for the upcoming earnings report later today. Well, we remember this. Remember this thing?
We're always looking for great startups to invest in. One of my favorite ones was CoreWeave.
Right.
My only regret is I didn't invest
Add that to the list.
enough. Yeah. And so in all of these investments that we've made recently, we've made some really terrific investments, and largely my only regret is that we didn't invest more. Because
of course, he's not going to say something bad about CoreWeave, but it goes to show that he does not think it's pure BS. He does not think it's pure BS. But yeah, CoreWeave reports later today. CoreWeave reports later today. I think the big topic is going to be about future contracts, connected power. Maybe they have some new announcements. It's of course not going to be about, oh, how profitable is this company today? No, it's about what's coming up next. Right now, consensus revenue-wise, $2.28 billion for the quarter. EPS, still a loss here of 36 cents. Let's see if we have actually some comments from the last time someone spoke. So the capital, okay, that they secured last time they spoke was $25 billion within the last 18 months. Okay, as for guidance, so CoreWeave, that was the last time they spoke back in September. They project significant capacity expansion with 900 megawatts expected to be operational by the end of the current year. 900 megawatts end of this year. We'll see if we get an update on that. An additional 1,300 megawatts of capacity is currently available for market deployment, indicating substantial future growth potential. The company anticipates rapid uptake of this capacity, noting that limited availability for 25 and 26 is expected to be secured quickly. So again, it's all about, okay, you've got all of this. How fast are you going to generate revenue? That will be, in my opinion, the big topic of the call. Maybe some more core scientific thing, but I don't think the analysts will focus on that. They'll really focus on this and 26. Okay, we're at the end of 25. Good morning to you as well. We're at the end of 25. What do you think about 26? Of course, they will say, oh, but we will provide guidance 3 months from now for 26, but we can already tell you that we're in talks with X amount for who knows got how many contracts, etc. It's always going to be the same thing, but at least let's hear it, because recently, of course, the stock did get hit significantly. Right, it got hit significantly after the Core Scientific deal that did not go through. The whole AI is a bubble. There's an issue. OpenAI, where's the money going to come from, etc., etc. So tonight is the first. It's not the first big earnings report, but it's one of those crucial players, CoreWeave. Tomorrow morning we do have a Nebius, so that's going to be also an interesting one. Like I said, we are going to do a live stream yet again tomorrow to cover Nebius. It's going to be an earlier one. I believe the earnings call is 8 a.m. Eastern. So yeah, make sure you wake up early or just come by later. Come by later. Then what do we have here? No, that's not a company. BTFD, BITF is the company. Bitfarms is also reporting later this week. As you can see here on Friday, we got that 50-day moving average also. Support could be a good indication. Can someone check what the implied move is going to be for CoreWeave after the earnings? That would be greatly appreciated. Iron is up 4.8% pre-market. If Nebius has a good earnings, you think it will pump CoreWeave too? Well, I don't think it matters much because CoreWeave reports later today and Nebius tomorrow before the market opens. So whatever happens with Nebius, CoreWeave will already have its own move. What did I say? Yeah, we have Rocket Lab and AST Space Mobile. I think they're also reporting later today. So Rocket Lab on Friday did drop under $50, under the 100-day moving average. We're not trying to make our way back above the 50-day one. So expected move 15%, 13.8%. Okay, so quite a big move. Quite a big move. Double digits. Well, mid double digits, low double digits, whatever you want to call it. So we'll go with if we go with a 15% move, let's say hypothetically, if we do use the pre-market action, again, it's not really a scientific experiment that we're doing here. It's just for the sake of seeing where we could be going. So let's do 15% up, 15% down, and we'll see what we reach. Something like this. Okay, so if we go 15% off from the price right now, we are going to go back above the 50-day moving average and quite close to the 100-day one. If we go 15% lower, we are going to go back to prices not seen since September 2025. So this is basically what we're looking at right now. On average, the implied move. Is there any concern on shift for debt levels? No, I don't think so. They're using debt. Again, debt is not always a problem, especially not when a company is profitable and expected to generate $1 billion in free cash flow 2027. That is going to be an issue for asset heavy or a capital high capex companies, unprofitable companies, I would say. That took a while to get out, but for Shift4, I don't think it's an issue. For now, at least, it's not an issue. So CoreWeave is this later today. Then we have Rocket Lab. So Rocket Lab, long time no see. Well, I'm happy you could join us this fine morning, afternoon, evening, wherever you are. Rocket Lab. Let's have a look at what the market is expecting this company to do. Of course, we all know what will move the stock, right? With Rocket Lab, I'm pretty sure the implied move there is also quite big. It's Neutron, right? Because for revenue, we have here $151.7 million for the quarter. EPS here, a loss of 6 cents. Let's maybe look at EBITDA for now. EBITDA also negative here, $23.6 million. But for Rocket Lab, it is comments on Neutron. Is Neutron delayed? Bam, we go down. It's not delayed, then I guess the market focuses on when exactly will they launch, any changes in contracts, right? Although if there were, I think we would have seen it, but we know that Electron is doing very well for them. Very well. So yeah, it's going to be interesting to listen to what they have to say during the earnings call. Because if Neutron is delayed, I'm not saying it is, but if it is, then by how long and why they decided to delay it? I mean, I can speculate as to why, but I'll just let them do the talking. Then we have the AST Space Mobile, also back to $70 right now. Should we settle the debate? I mean, is there a debate? Let's be honest. Is there a debate? I don't think so. So, AST Space Mobile. What do we expect? $22 million in revenue for the company. And I think I'm not even sure. I have to look at some other metrics here because all the other metrics are still money losing ones or won't really have a big impact. But this is basically it for AST Space Mobile. Expected to generate around $60 million for the year. Then 250, let's call it, for next year, and then 850 for the year after that. So this is basically why you're paying like a insane amount premium. It's because for fiscal year 2027, they're expected to generate $850 million. It's a company that right now is trading at $19 billion in market cap. So $19 billion in market cap, $60 million, let's call it, for this year. It is, yes, not the not the cheapest one out of the box. But if they do succeed, then I guess you paid an okay price if you bought it a bit earlier. MDA Space, the Canadian company, yeah, I mean, I talked a little bit about that during, I think, a previous live stream before the stock crashed because they lost the contract because SpaceX acquired the company that had a contract with them. It's an interesting one. It's a very interesting one. I don't know what has happened recently with the stock. Well, I think EchoStar, right? EchoStar was the company. It's definitely not one of those expensive names in this space, pun intended. It's a company that's expected to grow revenue not by much, but still double digits. It's expected to generate $2 billion or Canadian dollars in 2027. $2 billion Canadian 2027, market cap around $3 billion right now. We've just seen what the others are trading at. So it is definitely not an expensive one, but it's one that lost a big contract. But we'll see. I think with this one, it's worth waiting until they give us maybe a next earnings report update. My pleasure, James, and thank you for joining. Rubrik collaboration with Amazon, with AWS, you mean? Let's see what we have. Rubrik. 14 minutes. Yes, we have indeed. Rubrik signed strategic collaboration agreement with AWS to deliver cybersecurity solutions for AWS environments. The agreement focuses on supporting organizations in achieving cyber resilience while enabling enterprise AI deployment. Okay, very good. We'll see if we actually get some move from Rubrik. Yeah, no, not so much. Yes, but no, not so much. Closed the day Friday at 73. We're now at 75.7. So we're up 3.6% at the moment. PayPal, despite everything else moving, PayPal still doesn't move. It moves a lot more on the downside than it does on the upside. Our dear PayPal. MDA crashed again because of Global Star now. Okay, well, there you have it then. That's the thing. With these types of names, they might look cheap, but there is probably a reason why. And I guess you've just given me another reason why. Does share dilution concern you on Oscr? I mean, share dilution concerns everyone until it really comes down significantly. With Oscr, if they do manage to grow the way they're expected to grow, I don't think it's going to be that much of a concern. Unless it doesn't change in the future, of course. So, Pagaya earnings, we did talk about that a bit before. Yeah, dLocal is also later this week. We have today CoreWeave, Rocket Lab, AST. Tomorrow morning we have Nebius, and then we have dLocal later this week. dLocal is back at $14 pre-market. It did also rebound on that 100-day moving average on Friday. What do I expect from the quarter? Same as last quarter. I'm not talking here about the stock's reaction, but I'm talking about the results. Still expecting this company to still be growing quite rapidly, still profitable, still doing exactly what it should be doing. Am I expecting a big move? Well, I guess it depends on how the market is feeling like this week. The last time it reported was this one right here. Right? Was this big jump after earnings? Could we see the same thing and finally make our way to $20? I mean, that would be something. But if we can try again that $17 mark, I think that would be good enough. Hopefully PayPal will pull an AMD or an Alibaba. Maybe Alibaba is a better, let's say, comparison. Right? It's a stock that was cheap, didn't move for a long period of time. And then we got huge moves for this business, which is still not expensive today. Yes, it's still China. But yeah, dLocal still expecting a very good quarter from them, because I haven't seen anything that would tell me otherwise. Will I be covering new earnings? New is Thursday. Yeah, probably. New is Thursday. New has been performing very well. I know a lot of people were frustrated about New back here, $12, $13 or so. But I mean, it's been performing quite well since, right? Up $35, 35% since. I think it's been performing quite well. Plus, it gave a lot of investors a lot of time to buy this name at $10, $11, $9, $12, accumulate more shares. So it is at a resistance point right now, because it's been here 1, 2, 3 times already, maybe even 4, to around $16 or so. We do have earnings. I do think they will perform well business-wise, because this is an incredible business. So why don't you own it? Well, again, I own Mercado Libre. I think that's good enough. I own dLocal in the public portfolio, so I am covered. I am covered. You cannot invest based on hope. That is very true. That is very true. But when I say hope, is more on the market not overreacting or actually looking at the numbers and realizing that it's a good business. Nvidia going to 2020 to $220 before the year ends. Well, I mean, we weren't that far away from it. At the start of November, Nvidia was at $210. Nvidia will be more than AMD by the end of the year, but you do realize that Nvidia is a $4 trillion company, right? Just because the stock price might be the same does not mean it's the same price that you're paying for the company. One is a $4 trillion company, the other one is not. It's not a $1 trillion company at all. But yeah, AMD has been doing, of course, very well. And this was back before the earnings, right? The 8% on the upside, 8% on the downside. What was crazy is that the day after, the stock was up at 1.2% or so. But as you can see, yeah, for the week, the stock did, in fact, go down 8%. And now it's recovering a little bit. Pre-market, 3.3%. Hope is the first step on the... Isn't there a TV show with Henry Cavill coming out? Warhammer, I think. I'm pretty sure I thought I saw something like that. Thoughts on Nebius after earnings, pump or dump? I don't see why we should be dumping, but then again, flip of the coin. Do I think the report will be a good one? Yes. Because again, there's nothing that has shown me this quarter that things are not going in the right direction for Nebius. Now, what will the market do with the information that they get is up to the market, but this is also the quarter after the Microsoft deal was announced. So I do still expect them to beat their own estimates. I do still expect them to raise the full year ARR. Right now we're at $1 billion, I think. I think it could be a bit higher than that. What will the market do afterwards? Remains to be seen. Because remember, we're not in a quarter before the quarter where they give us the full year guidance for next year. A lot of analysts would love to get guidance already right now for next year, but you're not going to get it. You might be getting comments, yes, but that's about it. But that's about it. And yes, Oscr is down 8.5%. We've talked about that at the start of the stream. Stock is literally at the 200-day moving average, which, again, the more I think about it, maybe it's an opportunity. We'll see when the market opens what happens. 6 minutes. Yes, thank you. Thank you for the heads up. Would you go for new over dLocal or Melly if you were to make the decision now? To me, it's always Melly. To me, it's always Melly if I had to choose. Because it's just a great company. It gives you everything. It gives you Mercado Pago. It gives you the marketplace, e-commerce, logistics. It's not the cheapest one, share price, right? You have to spend $2,148 per share. But all three are great companies, in my opinion, to own. I just go with Melly because I know it's one of those where you just buy, hold, and forget about it. dLocal, being the smallest one, does represent the highest, let's say, returns currently, because you're buying a company here, sub $5 billion in market cap, could turn, in my opinion, into a multi-bagger. And Nu is, again, Nu despite... Nu is actually the same thing as not the same thing as a Grab, but not Micron. Nu. right? You're paying $16 per share. So you assume that this is a small company. But Nu is already a $76 billion company. People don't know this, but Nu is already a very, very big company. Very big company. Macro looks good, so good earnings should mean stock goes up. Well, yes, should mean. Also, now that we are at the end of a government shutdown, we should also be getting macro data on time, right? CPI reports, PPI reports, job reports, you name it. All of that should now come back on time, which could help the Fed to make a better decision, although the Fed has been late before. I'm still expecting a 25 basis point cut in December. I think that's what we've discussed yesterday as well. Probabilities are still in the favor of another cut for this year. Melly needs a stock split. Yeah, I guess it wouldn't hurt, right? I guess it wouldn't hurt. Another one that is going to have a stock split is, of course, Netflix. They're going to split their stock as well. Yes, stocks usually go up when they announce a stock split. Why is that? I guess it's just the way people view these things. More people can buy it if you don't have fractional shares, or if you don't want to buy a huge amount with options. I guess that's it. I guess that's it. Is Melly a better opportunity than Meta at the moment? It's a different opportunity. Meta is very cheap, in my opinion. After the recent, let's say, crash, I think we can call it a crash in stock price. I think it's the cheapest one of the Max 7. But yeah, I can't really choose because I own both. Which is always a good problem to have. It's always a good problem to have. Yes, we have 2 minutes. 2 minutes left. I know. I mean, bullish for stock performance, but business-wise, it doesn't change, right? It doesn't change. Yes, the stock might go up, but you would like the stock to go up because it follows the business fundamentals, not just because more people can buy shares. Because then you will have a scenario where, okay, stock has gone up a lot, but suddenly it's detached from reality, and then it is very expensive. Then it is very expensive. That said, let me prepare here the market open. Let's do this. All right. We have a minute left. And then we'll see what the market does on this fine Monday. Any news on Upsellera? I have not seen any news on Upsellera, but maybe there is, but I have not seen any on my end at the moment. Let's see if I missed maybe something here in the comment section. Thanks, Adam. Good luck to us all. Good to see that Chelsea game was Stamford Bridge falling down at halftime. Wasn't falling down, but we were not happy with the performance at halftime. I'll tell you that. We're not happy with the performance at halftime at all because it was too slow. It's always the same thing. But that changed, of course. Second half, we brought on Estevao Willian, and everything changed. Okay. Market is open, ladies and gentlemen. Ding, 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 ding. Market ears open. We are, well, of course, the heat map here is not updated yet, but the market is open November 10th. Ding, 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 bing, bing, bong, bing, bong. We are open. What we are seeing is, of course, again, a bit of a, let's say, better reaction for some of the names, for some others not so much. So we'll you know what, we'll leave it for a couple of seconds until we actually see what has happened. All right, this is what we get. This is what we get right now when the market is open. This is the heat map currently, and I think this is the first time that I'm seeing Hood's logo appear on here. They've come from a long way. So, okay, we have some nice movement. So now we can go back to the other page here and do this. We have Oscr that is down 10%, 9.99%. So we are literally at the 200-day moving average right now for Oscr. So it's done more when the market has opened than pre-market. United Health barely moved, I would say 0.7, 0.8%. Duolingo is at $200. Has he spoken on Duolingo? Today, no, but I already did a video last week about Duolingo. Then, let's see. Now I'm happy. I'm happier. I'm happier because we have PayPal that is not red for now. PayPal is not red for now. And Oscr is still down 10% or so, which, by the way, usually, when Jose is in Florida, he is in Florida right now. Unfortunately, Oscr is down 10%. Do with that information what you want. BMNR, back at $43, up 6.7%. Micron continues its insane run on the way up. CoreWeave is up 4.5%. Earnings later today with Iron here up over 5%. Palantir is up 4% or so. Hood 3.8%. AMD 3.8%. Same with HIMS. Basically, all of the others here are up 3 to 4%. We have a Shift 4 back at $68. Shift 4 is really a cheap name that is heavily shorted for some strange reason. When you look at all of the overvalued names, I don't understand why this one, which is undervalued, has like close to 20% short interest. It's crazy. It doesn't make any sense. Oscr is like nothing happened over the past 3 months. Well, okay, but still up significantly, I would say. Still up significantly. What else? We have SoFi making its way back closer to $30 or so. We have an NVIDIA 194, Rocket Lab up 4.4. Again, we've seen the open of the past couple of days, very green, then an hour or two in, starts to drop, but it's definitely a better open today than what we've seen over the last couple of days, that's for sure. We have Reddit here at the 100-day moving average, really close to $200. Evergreen Applied Digital at $32 right now. AST 71. Rubrik is up close to 4%. The local back above $14. Nebius is up 3%. They report tomorrow morning. Intel, as expected, still staying around that $39, $40 mark. We have Zeta back above $20. Good report last week, of course. Amazon, $250 for them. $284 for Google. And then as for the rest here, well, still have a PayPal at $67 right now. Actually, we'll have a look at Pagaya. So about the same, right? We were a bit higher. I'm not going to complain, but still, it opened up at around $29 or so. We're now at 29, so we're up 18.3% on the day. Yeah, I mean, Micron 5-year chart is wild. Let's see the others. Sezzle got hit last week after another good report, but stock dropped. Today we're up 3.6%. Dave did a bit better. Well, a lot better. Today it's up another 6%. $250 for Dave right now. Looking at Salesforce, still under 240. And Adobe, let's see what they're doing. 322, basically flat right now. The other ones, Klarna Klarna at 37.2, Figma probably at 55 or so, 44, also flat. Okay, interesting. We have, SoFi is closing in. SoFi is closing in on that $30 mark yet again. I mean, that's what happens when you are a very, very good company. When you are a very good company. Yeah, we did talk a little, we just went over the announcement rubric AWS news. It's a good addition to the previous announcement with some other partners out there. I did talk about. I covered actually Sezzle's earnings really quickly last week. Found it quite good, but the stock tanked. Is it more attractive? Well, you get good numbers, stock goes down. I guess it's more attractive, but is it something I'm going to buy? Probably not. I'm not opening up new positions. Is basically what I'm trying to say. So, is there any other name that we should look at? No, not playing any calls whatsoever with Oscr. Pure shares with this one. Pure shares. What did we want to look at right now? Maybe let's have a look at Monday because they reported. Okay, so they're down 16%. They were down a little bit more. They're seeing a little bit of a buying action for Monday. Cart, which apparently has two names, Maple Bear, is down 1.4%. Celsius, look at Celsius. They reported last week, right? Yes, they did. Yes, they did. They are also here on the 200-day moving average right now, which means they're back to, they basically filled that gap from 3 months ago, and they're back on that 200-day moving average. Novo Nordisk keeps, maybe Novo Nordisk might have here a double bottom scenario. Stock is oversold for sure, but like I said last week, Novo Nordisk is one of those turnaround names that it will turn around. The question is, how long will it take? How long will it take is the question. Is it worth picking up here? If you have the patience, then I guess it is. If you don't, then not. So it's very simple. Very simple. Is it connected? Yeah, the chat is connected. Okay. That's Novo with Shift 4. Also, by the way, Novo Nordisk was cheaper before than it is right now. You might say, how does that make any sense? Well, it makes sense since they completely changed their guidance. Previously, they were expected to grow much faster than what they are right now. And so, of course, it is cheaper. It was cheaper when the stock price was higher, but it was cheaper because the guidance was also higher. Shift 4, as you know, is very cheap in my opinion. I think not in my opinion. If you just look at the business, it's cheap. It's cheap. $1 billion buyback. They're not going to buy $1 billion of shares right now, but it does give them quite a lot of flexibility. That if they do assume that, okay, our stock right now is extremely cheap, we are still on track to reach our 2027 goals, we're going to buy an insane amount of shares every time we see our stock basically at these levels. The execution there has been great. Yes, I know some people don't like the whole M&A thing, but as long as their return on investment is good, why not? Why not? Elf. Yeah, what happened with that one last week? Also down a lot. Yeah. Down a lot. Back to $80. Yeah, I don't know. Elf is not really a company I'm that interested in. Which again, I'll pick for Duolingo and Elf, although some people might disagree, but that's just because I'm very much interested in Shift 4, more interested in Duolingo than I am in Elf. And SoFi, SoFi did touch $30. SoFi did touch $30. Webull, yeah, probably at $10 right now. Yeah, let's call it $10. Well, it did dip quite well. It looks more dramatic than what it really is. It's down 16% actually. Well, interesting. They do report earnings at the end of November. So have I spoken about Oscr? Yes, the whole start of the stream was about Oscr. I mean, I talked about Webull, I think, when was it? For October? I think in October. It looks very decent, I would say. Seems like the market doesn't like it for now, but after the next earnings report with the relaunching of crypto in certain markets, etc., I do think that they can show the market that, okay, maybe we do deserve to go and be valued a bit higher, get a higher multiple as well. And we have a $30 here, SoFi right now. This is what happens. Huge overreaction. You take the opportunity, you buy more, and the company continues to perform the way it should because it is a great company. It is, in my opinion, one of those best-in-class ones out there. Oscr is now well under the 200-day moving average at $15.30. Like I said, keep calm with this one. Still some unknowns for the short term, for the long term. I still believe, that's just my personal opinion, still believe they'll be doing well. But right now, it seems like the market is not happy with everything that's going on around the extension, ACA subsidies, although, as we've discussed, guidance has taken into consideration that the things might not be extended. But then with the other part where people get money and they will have to go shop for their own program, I guess it goes both ways. You can look at it from an optimistic standpoint. You can look at it from a pessimistic standpoint. No, I do not. I do not. Do you think Adobe will stay at this level until next report? Probably. I did drop my Adobe interview yesterday, in case some of you missed it, and thank you for the feedback for those that did already watch it. I mean, the level right now is pretty low. Valuation-wise, it's very cheap. They reaffirmed their guidance, so we know they're not going to miss. But I guess the market still is waiting for that maybe reacceleration in growth. Maybe a reacceleration in growth is what's going to push this one back higher. Are you still not buying Oscr after such a dip? No, again, because there is a reason why this dip has happened. Right? It's not because, every dip that happens is a reason to buy. No, there is a reason why it happens. It can still have an impact in the short run. I have my position already. I'm comfortable waiting. It's not like we're going to be at $20 tomorrow when I get my answers. No, I'll have time to accumulate more shares. Maybe in the next coming days, we do have more information coming out. It's possible. And then I'll start to accumulate more and more. Oscar's drop has nothing to do with Trump's announcement regarding purchasing of. So explain why not? It's 100% about AC subsidies. No, it's not. No, it's not. You are saying this with utmost confidence, but it's not, because the ACA subsidies extensions, we have been talking about this. Oscr has been talking about this with their own guidance for next year. It's not really the bigger issue here. It's a mix of yes and this and the sentiment around the extensions as well. But this is definitely playing a very big part. A very big part. DraftKings. Now, but DraftKings did drop a little bit after the earnings because there was that one-time hit that they had to take. I think the $300 million the $300 million hit. If that did not happen, then the quarter would have looked much, much better. But I guess the market right now has realized that DraftKings is a big, big winner and player in the gambling and maybe in the future also the prediction markets. Not maybe, they're going to acquire that company. So good reaction right here. The trade desk, again, back at the same levels from that bottom right here. Back at the same level from that bottom right here in September, $44, $45. I talked a little bit about it last week. Report was good, actually. Report was very good. Sentiment is bad. Report is good. It is cheaper than before. That's for sure. It's cheaper than before. With regards to the trade desk, good comments as well. Again, some people will always say, "Oh yeah, but I don't trust management when they say that they're not competing with Amazon, etc., etc." But the numbers don't lie. Like Amazon's advertising is mostly to support their own business. It's mostly to support their own demand for their own website. The open internet is quite big, and that's where the trade desk is playing in. That's where the trade desk is playing in. Because then you're not okay. So you came to the conclusion just because the other stock prices did not move much. Let's look what Centene is doing today. It's down 9.7%. Centene is down 9.7%. Let's see, Molina Healthcare, they already took a hit after their last earnings report, but it's also down 5.3%. Again, I think it's just a mix of both, because as we've discussed at the start, it gives people the opportunity to go and purchase their own. Are they going to purchase more Oscr plans? Are they going to purchase some others? Remains to be seen what's going to happen with the pricing, because when you give people the option to go buy specific plans, then maybe pricing becomes highly competitive, which is good for the buyer, right? Not good for the for the insurance companies. But I still believe that Oscr is well positioned. Remains to be seen how much upside we can get from maybe potential extensions. And again, the whole subsidizing thing is not a certain thing right now. Yeah, the big bullish case is ICRA here. That's the big bullish case. And that's what Oscr is going after. It's not something that will replace ACA just like that, but that's the long-term game here, for sure. Am I planning on adding? No, I wait. We'll see where the bleeding stops here right now. Again, anyways, I'm waiting because I have a lot of companies reporting this week in CoreWeave, Rocket Lab, Nebius, dLocal. So I have time. I wonder when Alibaba is actually reporting. Potentially Thursday. It's quite strange that we still don't have a date, but yeah, potentially Thursday. Josh Kushner is my plan for Oscr. Yeah, but he's not. I don't think he's that involved in the company right now. Of course, he's still involved, but I don't think he's an actively involved person in that company right now, at least. Let's have a look at the heat map if we see something there. No, seems pretty good. Seems like a pretty good day for now. Maybe we can end it here until. So we, of course he's the co-founder, but he spends more time. I think he has a VC right now, I believe. Let's see. Yeah, Thrive Capital. I think he spends way more time at Thrive Capital than he does at Oscr. That's why they have their own the CEO and whatever. Are you buying dLocal? No, I'm not buying anything before before the earnings. I will do my buying after the earnings. And so with that, I think we can end it here. Good start of the week. Of course, do expect some earnings review videos today, tomorrow, the day after that. Tomorrow morning, we do have Nebius, so stay tuned for the Nebius live stream tomorrow. And yeah, we'll see each other in the next one. Thank you all for joining. Have a great rest of your week and day.